All right, good morning, guys. On March 5th, Tradingology.com's Trading Room. Good to see you guys this fine morning. Another wild day starting up. Futures were way down overnight again after another wild run up yesterday. So you want to call it Whipsaw Week? This is it for you. Good morning, sir.
Good morning, everybody. Everybody's doing well.
We're just getting started.
Nice.
How many 1,000-point moves can you get within 2 weeks?
Yeah, really. I mean, it's a little dizzying, isn't it?
It's just crazy.
Yeah.
I gotta say, I gotta love it for trading, y'all. But it's kind of weird, just overall.
It has been good. Good morning, Mark. Morning, Stephen.
Morning, guys. Good to see you.
Yeah, so, it looks like we're right up on the internals up to the really extreme levels.
Yeah, we're definitely set up for a true trend day to the downside. I was posting with
Oh, yeah.
Sell the rallies on this day again.
Yep, exactly.
Today I really loved because I was able to hit a couple of my targets pre-market. So I was just watching them open. It's like, yep, I'm not coming up here. This is in my just watching area.
Yeah.
Yeah, hit pre-market on both ES and the NQ. So I grabbed profits even before the market opened, so I was able to get ready for you guys. We love days like that.
Yeah, those are good days. And, when you get moves that are like, 10, 20 points on the NQs, I mean, that's a really good
big move. Yeah.
Yeah. Yeah. So yesterday we're up 1,100 points on the Dow. That is, it's just another sign of volatility. But yeah, the internals are really, really strong today. So it looks like we're just going to be in a downtrend most of the day. Any rallies we get are going to get sold off. But you never know. Maybe Powell will come out with another emergency statement. And
look at another 50 points today.
Yeah.
I went and watched those recordings with, what's his name, that you were talking about, the 1-2-parters about the.
Jeff Schneider.
Yeah.
Good stuff.
Wow, that really makes you think. It's like big picture, this world, just the whole thing. It's like,
yeah.
Talk about a credit-based, faith-backed system that we have.
Yeah, faith-based is about the right word. Yeah, crazy.
We'll pull these guys over too to look at them for you.
There's probably more evidence that this is going to be more 1929, 1932 style. I really hope that's not the case, but
yeah, it keeps coming out more and more.
Yeah, and this kind of weakness we have not seen in a very, very long time.
Look at that. SR 1 and 2 are on top of each other on the Dow today, just because of all the volatility.
Yeah, it was down yesterday.
It went way down. Now it's kind of reverted back, and it's just coming down. That's interesting.
Well, look how far away it was from the S1, S2 yesterday.
Yeah.
Wow.
But here they are. They all went up to 10. Now they're all coming down.
Yeah. Yeah, it looks like we're going to complete. We've already reversed on the futures, pretty much.
Yeah, we came right up to that person's pivot and bounced right down off it on the NQ. That's for sure. That held perfectly. How about you guys? You always hear us talking. You guys got any trades either way? Whether you got stopped out or taking profits, how are you guys doing during this interesting time that we live in that has never happened before, or very rarely happens?
I think I think a lot of traders were like, oh, wow, it's a sigh of relief that we went up 1,100 points. And then they wake up to this.
Steven says he got stopped out with good profit. That's a good way to get stopped out. Lock up those
Okay.
profits.
Good. Andre's on the sidelines.
Keep selling the rally. There you go, Steven. Good job. Mark says doing great. Up big on the VXX trade. Definitely want be careful trading those guys too. VXX is wicked volatile. Don't hold it long term, and I think you know that, but just to reiterate it.
Yeah, VXX. Yeah, it's a good trade. As I mentioned in the trading room yesterday, I was short the diamonds. That's doing well today.
I was going to
Down
say that worked out really well overnight.
Yep, it's down $8.
Nice. Yeah, in addition to watching, obviously, the futures since I trade them, is I also have the same things going on for the correlations with the ETFs. So I'll watch the diamonds, the Qs, the SPY, and the IWM, and they all react very similar. So it's a combination. Again, I'm never watching just one indicator, right? So if I'm trading the futures, I'm also watching what the indexes are doing. So if you haven't set that up yet, I'd say that's a good thing to also keep an eye on for anyone else that's out there doing similar strategies. Because they do react very similar. And sometimes you can see across the indexes because they do tend to move together. Not identical, obviously, but if one hits a certain point and it turns, it'll turn the whole boat, right? So it's good to know if you're hitting those levels on any of the major indexes. So I keep my eyes on those too.
I did hear a report, kind of just an update on this whole pandemic thing. I won't name it here because if you put this up on YouTube, you get it blocked. But it looks like the smog is starting to return to China because of the corona. Because we won't say corona. The beer flu. It is, they stopped all the factories. The smog and the pollution went down. And over the last couple of days, evidently, it's starting to get polluted again. So
factories starting back up?
Factories are starting back up. So I'm not sure if they think they have it totally contained or they're just being like, hey, we can't take this anymore economically. You guys got to get back to work. I don't care if you die from this thing. We need production. I wouldn't put it past the Chinese government to do that.
Right.
I really wouldn't.
Yeah, it's one of those. I know I sent you a message. I was just watching the news the other evening. I don't remember what day it was, if it was 1 or 2 days ago. It's like, it's amazing how they're using this. And yeah, I know it's a newer one and they don't have a vaccine or they're putting all this money into a vaccine.
Yeah.
But it's still just another version of the flu. It might be different. And yeah, I don't know. Not trying to play tinfoil hat guy, but
yeah, I mean, there are coronaviruses, and that's how they named it. There are other flu bugs that are very similar to the strain. I guess this one is a little bit different. It's a mutant strain, but it's very similar to other types of flu that's already out there.
Yeah, I was looking on the CDC site for the official word, if you can call it that, and it's actually a variation of SARS that they had, what was it, a decade ago? So it's a variant of that as well.
Right. It's just mutated, that's all.
Yeah, exactly. So they just call it something new and
scary.
And they use it as an excuse. We knew this was coming. It was just a matter of when, with the recession, with the yield curve inverting, with all the problems with the fragile entire monetary system, which I'm even more in the know about after watching those videos that Dave talked about. So if you haven't seen those, I highly recommend them. I see why Dave was recommending it as well. So get yourself informed and know what's going on and how things actually work, and just how this repo market, they claim it's working, but how it's actually working is interesting.
Yeah. I thought the most interesting thing he said was that they really have no impact on interest rates at all.
Right.
It's just they're managing expectations of interest rates.
Yeah, so they're in zero control. Actually, he can say whatever he wants. It's whatever we do.
Yeah, exactly. It's the market that controls it.
Yeah, you can't stop the herd. You try and stop a herd of buffalo because you say, "Go stand over there." Good luck.
Yeah, exactly. Yeah,
I absolutely agree with that. That was one of the points of watching. It's like, oh my God.
Yeah, that was kind of weird. So, um, I mean, there's just so much from that. I think that the market controls the rates. Of course, they had to, and actually, the half a point rate cut that they had on Monday was the first rate cut from an emergency meeting since the 2008 financial crisis. So they've had emergency. They started. Remember, they did have one emergency meeting. I think like a month and a half ago.
Yep, I believe there was the unscheduled.
Remember that? Yeah, an unscheduled one, and then but this is the first one that was created with a rate cut,
right,
since 2008.
Sure, makes sense. And they're already. I think that I've read somewhere. I don't have the article on top of me right now, but I think I was reading where they're already planning for another 25 or 50 basis points in the regular March meeting.
Yeah, March. Well, they got to do it. I mean, look at the 10-year. It's under 1% again today. They can't keep the 3-month, the short-term rate and the overnight rate at 1.25 with the 10 years under 1. People are going to be they're going to be selling off the 10-year and buying the short term, driving up the rate, driving the rates lower, and so there's an arbitrage opportunity there. You can't do that. They got to keep up with the 10-year. I don't know what the 30-year is, but I think it was like 1.3. I don't know what it is today.
We'll take a quick peek here. 30 years, 1.67. 10 years at 102 right now. Wait, didn't?
102.
This is the 4th. It's not showing the 5th yet.
Oh, okay. Yeah, they got the 4th at 1.67. I'm pretty sure it did hit 1.3 at some point here recently. But it's come down from 2.33 at the beginning of the year to 1.67 yesterday.
Yeah, I've heard from some people in the real estate markets and finance markets that their phones are absolutely berserk for refis now.
Really? Wow.
Yep.
Yeah, I mean, yeah, the mortgage rates are they're like 3% or something, aren't they?
It might be below with this going on with another half a point cut.
Yeah, it's crazy.
All right, you guys are a quiet crowd this morning. Must be busy trading. We got another rally coming and everyone's getting ready to sell again. No changes on the internals.
Yeah, they're not moving. So yeah, this is definitely looks like we're at 1014. We're still under 2000. Yep, true trend day. Okay, 30-year treasury is at 1.59 from 1.67 yesterday. Man, that's a big, big decline. Yeah, yield yesterday at the high was 1.7, settled at 1.67. Today is 1.59. Jeez.
Look out below.
That's for sure.
Where's my daily chart? Yeah, I just noticed a few days ago on the daily chart that the cloud has just finally caught up from the wicked drop.
Yeah.
The NASDAQ took another day, but look at how they both reached the cloud and they selling off again.
Backed right off, yeah.
We got a little bear trap set up intraday here.
Yeah, so you might get a little bit of a
little bounce out of it.
Bounce, but don't trust it.
Exactly.
Steven says, let's see, he says, with all the volume going into the declining issues, are the rallies like the current short one mostly institutional trades? I don't know. I mean, there's not a lot of retail investors in the market trading like we are that can move the market.
That can generate that volume, right?
Yeah. So, it's a combination of all the participants for sure. They're just trying to take advantage of the volatility, but on the net is sell orders.
So Andre says, can you please refresh how to read the internals? So I'll give you mine and correct me if I'm wrong, Dave. So I'll start with the original Market Timer Excel. The green is the advancing issues. So things that are moving up, stocks, issues. The gray that you can't really see because it's perfectly aligned with the green today is the volume that's going into those issues. So we see those are buried at below 0.1. The yellow is the opposite. The yellow is the declining issues. So things that are selling and going down. And the pink or reddish is the volume going into those. So we see those, everything is negative, and they correlate the same here. Everything is buried. It's just a different way of looking at it. There's actually green and gray dots, but they're right on top of each other today. So you see yesterday where we closed the green and the grays, those are similar to the green and the grays. So we see everything is negative on the internals. These kind of work together, just looking at them in a different way that it's mapped. And
yeah. So the one on the far right is if it's a negative day, they're all going to be below that 20% level. If it's a positive day, they're all going to be above that 80% level. On the middle one there, the one you just described, the original Excel, you can see both the volume and the issues. But yeah, so I mean, you got a 90% down day today. That's pretty extreme.
So everything, so that's saying all the trading that's going on right now on the New York Stock Exchange is negative biased. 90% of what's happening right now is selling. That's what this is showing us.
Yep.
And the advancing declining issues, what I upgraded to the new $sign ADD, so I'm in the new world, which shows the exact same thing as the advanced minus declining.
Right.
So that shows the difference of the total issues that are happening right now. The sum is negative 2,200. So there might be 500 positive issues because maybe there's a couple stocks that are doing good for whatever reason, but there's whatever the math would be, 2,700 that are down. So this is the net of the advancing and declining issues. The net is negative, and this shows the volume that's going into it is perfectly formed to the downside as they're releasing those sell orders is what we speculate. Obviously, we don't know for sure, but just looking at how these things react is they're releasing sell orders because they're probably stacked up on the books of the specialists or anybody that's the algorithms that are releasing the orders. That's how we read those.
Yeah, there's about 2,900 to 3,000 stocks on the NYSE that trade on a daily basis, and so when you have 2,269 decliners, so there's about 700 that are either up or unchanged. So it doesn't count the unchanged ones.
And I did have an email from one of the subscribers asking about the signals that we have on like the MT swing and MT, and why there wasn't one dedicated to the S&P 500. And I sent him an email back, but just in case anybody else was curious why there isn't like a third, drop down for SP 500, it's because the SP 500 and the Dow are both derived from the NYSE Stock Exchange. So we use the same fundamentals to track and trade both the Dow and the ES and anything related to the S&P 500. And the NASDAQ is a whole separate exchange, right? So that's why there's a whole separate set of internals for that. So we have different indicators based off of that and how Dave and the developers and the whole Strong Market team built those indicators.
Yeah, I mean, there's a little bit of overlap because you have, there's a couple of issues that are listed both on the NASDAQ and on the NYSE. But for the most part, when we did the correlations, the correlation of the S&P 500 to the total NYSE was very, very high. So we didn't really have to do anything different. In the YM, you could also do the advanced decline for the YM, but that would be kind of, I mean, you're only talking about 30 stocks. So it would be, there'd be more anomalies, but I'm not sure if it would be helpful for overall market direction.
Did that help, Andre, with that review and just talk of the overall? Awesome. So you know what I'm going to do? I know we go way back here, an awesome member. Next time you ask me, I'm going to tell you to watch this video.
Yeah. Mark this one in the thing.
Right.
Internal market review explained.
I love helping. It's all good. 920.
You know what surprised me throughout this entire volatility period is the YMNQ spread. It has not gone up. It's really been very odd.
Yeah, and look at it today. Holy cow, I haven't looked at it in a little while.
Yeah, it's just
that 1% to the negative.
Yeah, it's just it seems odd to me.
We definitely there was a lot of conflicts in the setup, so I wasn't even looking at trading it today.
Yeah.
Attention to these charts, and that's interesting. That's the 4 hour.
Yeah, with the market down like this, I would have anticipated the tech stocks especially would have gotten hit really hard. I mean, there was a report this morning that iPhone, the supply chain for iPhones is like really backed up coming from China. So you're not going to have those. There's going to be a shortage of iPhones, I guess.
Yeah, it's interesting. The Dow is definitely weaker than the NASDAQ still, and that's reflecting in it.
Yeah. Maybe because they're multinational rather than, strictly technology stocks. Maybe that's the rationale behind that they're going to get hit harder if this pandemic continues to expand.
Yeah, we had another anomaly too that we saw in the spreadsheet, which is kind of unique. Whereas we were going up the curve on the negative side, but we're actually a positive spread. I don't believe I've seen that before. So I think that's also correlated to this anomaly that we're seeing in not normal times.
Definitely.
So when we see these black swan type events, we can probably correlate and put a notion to it doesn't react as it normally does. And this all started since September 17th. And the repo market injections, which we know is, or those that don't watch the movie will know, the video, is the Fed just giving money to bankers, and the bankers hopefully do what they're supposed to do with it and lend it to people to inject. And that has definitely thrown off what we normally saw as the oscillations. And now we're seeing during this major drop, yeah, we had some positive days here in the spread and we were coming back, but now it's kind of not acting as expected. Like if we had a positive 40, I would expect the curve to go down.
Yeah, I know.
So this is very interesting. I don't think this has ever happened before.
No, yeah, it's very odd. So of course the markets can really kind of mess up everything, and you just don't have the kind of confidence in a lot of the signals that in normal volatility times.
I think it's the extremes, right? Because we're getting these
really at extremes.
These 1,000-point moves, and that we've never seen that, or we've seen it very rarely.
Right. Yeah. So you got a 1,000-point move yesterday, 700-point decline today, and the day before that it was down, and the day before that it was up, and really big moves. So.
Yeah, I joked about it in one of the emails where it's like the people that are updating that wiki page are definitely busy because every day there's a new top 10.
Yeah, I know. Yeah, that was enlightening.
You're welcome, Mark. Happy to help. Andre, what do you got here? Maybe too much to ask, but can you do a walkthrough on your current daily best practice starting with the VA, then maybe scalping the straight indexes. What is everything you look at? The latest indicators on the charts like Parsons pivots. Yeah, I start pretty early and I watch pre-market what's going on, and I establish my levels where I want to buy or sell at is what I personally do. I'm doing that more than the VA now. I still watch the VA because I want to see how it's correlating. I trade it less than I did before, but if there's a nice setup, I still will take advantage of it. But I'm doing these like I was pre-market short on the NQ and the ES and grabbed some profits there, and I was happy. So I hit my goals. So I'm always happy to hit my goals before the session starts for you guys, because I don't have to worry about stuff that I'm missing. But then, so yeah, the way I do it personally, Andre, is I'll look for those first. And if I hit my goals, I'm just kind of looking, hey, if it happens again for a second chance, like maybe here would have been a second stab at it. If you wanted to do a quick scalp on the ES side, which I think I actually did for 2 minutes before I opened up this room, I upped the profits by another 100. And yeah, then I'm just looking at, where the index is, where the ETFs, once we open, and I do reviews is kind of the way, is what I do. Dave just pushes a button and he gets $10,000 in his account.
I try to simplify things as much as I possibly can. And I looked at the market yesterday and I said, okay, I'm going to short the diamonds. And that's all I did. Shorted the diamonds. And,
so yes, how do I enter and how do I exit? So if I get below my level, I just go short, market order. And I have targets 5 points away, 2.5 points away, whatever that target is. I just exit. So buy 2 contracts, sell 1, sell 2, done. If it goes against me, then I get out. I have my stop mentally right here. If for some reason something wicked happens, so I typically don't trade 5 minutes before the open and 5 minutes after the open now when I'm doing one-sided trades like this, because that's the shakeout time. They want to whip people out. So I'll do it. So this is one was, 10, 15 minutes before, so I was safe. Actually, this was a good 20 minutes, 25 minutes before. So I was able to go short here. So that's how I enter and exit. It's purely profit targets and level targets. So that's how I define when you're below. Or you mean, how do I define when I'm below your level? When the bar goes below it. So this is set at 8,700. As soon as this is trading at 8699.75, I'm in. The gold line is where I just set my level for where I want to get in based on pre-market volume. I might put together a little series if people are curious how I do it. I don't have time to go through all of it on these sessions, but it is something that, yeah, so I'm above and below. So like all this, I'm not trading because this is part of the whipsaw. But if it pushes above this, yeah, then I'm going to like it to the upside and I'll take it long for a few, 5 or 10 points and then get out again. If it crashes right back down, then I'm stopped out. It's, yeah. Yes, exactly. I look at pre-market volume. So when these levels get set, and you mentioned this the other day, Dave, it's really interesting around how squeezing down and just the levels that we're at now, whether they're 100 and 200 and 500 point things because of these drastic times.
Yeah.
So pre-market, obviously volume isn't what it is during market open, right? So if we look at the YM over here, we see much higher levels. So I'm looking for peaks is what I'm looking for. And I'm setting where did it trade during all that volume. So I look for enough of the volume and I set, okay, if it goes below that, then that's going to be a real move instead of the chop in between it. And I look at where these levels are set from the pivots. So I know this is the middle. So standard reasoning is selling below it and buying above it is how a lot of machines are programmed. So I look for the high volatility, the high volume, and I look at where these lines are, and I set these. There's not exact, like, if it equals 4, then it's 5. There's always some art to anything. Nothing is 100% defined science in the markets because they're emotional. People behind it are emotional. Yes, there's a ton of computers and algorithms doing it, and that's how these lines come into play. This is where the computers are programmed, is where these pivots are, because the computers see these pivots too. And people can code, can't talk now. People code the computers based on when these levels get hit. So that's kind of the big picture to it. I'll try and put together something, maybe a video, or maybe I'll do record as I'm doing it or something one of the days, but every day is slightly different. It all depends on the pre-market activity. Dave's like, what are you talking about?
No, that's exactly the way I've traded it in the past. I mean, you do look at the volume patterns, you look at the support and resistance areas. I like the person's pivots. I think that's probably a really good. I think it works. It definitely does work. I mean, looking on the RTY, came down to that green pivot at 1485, bounced right off of it. So you have to look at the ones that have the highest probability of winning. And when you define those areas and you see them bouncing off of those areas, those are the ones those are the trades you should take. Don't take the ones that are cutting through the lines and they're not really doing anything. They're just chopping around. Look at the ones, the instruments there that are actually respecting those lines, and then take those trades. So
I can definitely record doing it. The one thing that I'm fearful of is people will see what I did one day and they will take it as gospel and try and repeat it every single day on what the numbers were. So that's the only thing that I'm fearful of, because people misconstrue things. So
yeah, Stephen, Dan, it does have a technology background. He's in IT.
Yeah, I've been in IT for 20 plus years. Definitely technology background.
Andre, I mean by respecting the lines is they actually bounce off those lines, or they either act as support or they act as resistance. So on the RTY pre-open, that support level at 1485 there, they respected it. It didn't close below that. It didn't trade below that. It hit it perfectly and bounced off of it.
Yeah, I want to help you be your own painter, right? Absolutely.
It is an art, Andre, for sure. It's kind of, you're really, they talk about AIs in trading, but sometimes you just have to use NI, natural intelligence.
I thought you were going to say neural or something.
No, just natural intelligence. And, you have to kind of, the human brain has the ability to take in a lot of information that you may not consciously think of. But when you start to put together the volume, you start to put together these support and resistance areas, and you look at it as a whole, then the trade idea will come to you. It is a little bit of art. There is a little bit of a subconscious mixing of that data in order to come up with an idea. But you have to have some sort of you have to have some sort of a thesis for your trade, And, I think Dan has it pretty well put together.
And the longer I set these, the more, if people start to try and follow it, absolutely paper trade it until you've seen it work. And maybe I'll put together one and post it up.
And don't forget, for you guys who are in the Wealth Masterclass, we have a 1:00 meeting today, a meetup.
Nice.
We're going to be talking about surviving and thriving.
Yeah, you said if it's volatile, we might do every 2 weeks. We should do it like every week now. With this volatility.
I know it. Yeah, it's crazy. Changes day by day, but now it's we've got some pretty interesting things to talk about. I mean, this is just a fantastic market. But on it, I mean, we talk about the macro level of the economy, which is worldwide, but then we can narrow it down to the personal level. And what you guys specifically, what I want to talk about is what you guys should do, and what I'm doing to help prepare for a 1932 or 1929 to 1932 type of depression coming, which is a possibility.
Do you think it's interesting that we're in the 20s again?
Yeah, I know.
The roaring 20s? I don't know.
And it's been almost exactly right from 1929 to 2019, right? 90 years.
Mm-hmm.
Just like, did you watch that other video by Beretta?
Yeah, they were talking about the 90 and the 70 year stuff.
Yeah.
Yep.
Very, very interesting. Dave, did you email a link to the masterclass session today? No, it is in. I set it up the day after we had the last one. It's in the portal underneath in the download section, that PDF download for the Wealth Masterclass.
Same link as the last meeting. You got it.
Yep.
I taught Dave how to do recurring meetings in Zoom. Woo!
Yes. Yes, and I needed it.
Now we're going to work on Google Live or YouTube Live.
Yeah. That's a challenge for sure.
It's all good.
Yes, 1 p.m. today, Eastern time.
So you get a 2-hour and 20-minute break between now and then.
Yeah, I'm going to take a nap because I was up at 4 o'clock again this morning.
Yeah. Still perfect setup.
Yeah.
Nobody's moving. Nobody's flinching.
No.
So Steven's over there. Steven just sold his rally because he's seen this come back down. And now everything's going to drop again. So I see Steven's making money right now. I can already hear it. See, he says, yep. Good job, man. Proper management.
Nice.
I like to see it.
Yeah, I'm going to hold on to my DIA short position until the close. I mean, with the internals like that, I don't think we're going to get a rally. I'll just hold them right into the close and probably exit right at the close. Because today we'll be down 900 and tomorrow we'll be up 800.
Right?
Yeah.
Wouldn't surprise me one bit.
Yeah, me either.
Here's the part that I really laugh about is, okay, so I set this. Did the computer see me?
Yeah.
That's not a level from an algorithm. That's my level. See, that's what I love about that though is, so that's my, if I go above it, I'm going to like it, I'm going to buy it. So I don't get tricked out of all this garbage. That's my rules that just save me money.
Yeah, those AIs are picking up on your levels that you said.
Oh, they're watching me.
Yeah, funny.
Right. Yeah, right. I got enough things that are recording and listening with devices these days. Anything's possible.
Yeah, that's true.
Just telling them what I'm doing. All right.
Boy, look at the RTY compared to the Dow and NASDAQ. Really looks much, much weaker.
Yeah, what are we? 2.2, 2.0, 1.3, 2.3.
Yeah.
YM's the biggest loser right now.
So YM's a big one. Yep.
And our crypto's on the way up again. Small little stair steps up now. 23.96 right now.
Yeah, actually, and I was talking with Jay High at 139 from the streams, and there's this guy who goes by the handle Crypto Wizard, and he said, I wonder if I can find it here. I guess Crypto Wizard was calling for XRP to hit, where was it? 25 cents to 27 cents before going back down to 18.5 cents. And there is an inverse head and shoulders pattern on the 2-hour chart for XRP, which would give my target on it was 26.5 cents. So it's got a couple of cents to go to the upside. And then, but I still have a 19-cent target on my downside because of the daily head and shoulders pattern. So we'll see. If we get up above 27, though, I think we're gonna keep going higher.
That's the part that's tricky about applying our traditional
It is.
patterns to crypto, because there's no, like we've always talked about, there's no discovery there. There's no
Yeah.
rules in crypto yet.
Yeah, it's such a it's a small market. I mean, you're talking 248 billion, which is nothing.
Right.
And and a lot of the trading volume that you see is not real volume. It's just wash trading, so you can't even rely on that.
Sure.
Um, but yeah, it's nice to see a little bit of green there. The nicer thing about it is that it's not correlated to the decline in the market today.
Right.
So we got green there, and we got red in the stock market.
Yep. Oh, one thing I did, since I was always curious, because I started buying in July, I think it was, all the way through December, and I haven't bought in a little while just because I was happy with my level. So I always wondered what exactly my cost average was, because I never did all the math on it. So what I did is I put together a spreadsheet. Now I know exactly where I'm at, so I'm happy.
Oh, nice, nice, nice.
So probably what I'll do is I'll blank it out and I'll put the spreadsheet up on the member site, so in case they're doing the same thing, because there's a little bit of math that goes into that. If you start buying,
Yeah,
once a week,
right.
you want to figure it all out. So I got a Excel sheet for you guys for that, for dollar cost averaging.
Oh man, that's awesome, man. That is awesome. Where are you buying from? What exchange do you use mostly?
Coinbase typically now still.
Yeah. Okay. I saw that up down volume is funny. At the beginning of the new 5 minute, it's green, but then it always closes red.
Yeah, they like to trick you on that one. I have seen that too.
Yeah.
It's almost like they have to build the top half of the candle first.
Yeah.
They do the bottom half and they close it.
Yeah.
You will see that. Yeah, that's what he's talking about there. If you guys don't know, is when the next 5 minute joins, sometimes the current one will be green.
Yeah.
But then it closes red.
Yeah. Steven says it's happened 3 or 4 times so far. Yeah, it has. I've been watching that too. Interesting.
And the green ones over here are okay because we're below the 2000. So these are not deal breakers.
Right.
This will expect to be a little bit up and down chop. Below 2000 is what matters.
And it's true though that one day, what was the last Friday? It was down below 2000, but then it closed over 2000, and that is a definite sign that the market's going to go higher. That magical 2000 level is holding after all of these years. It's unbelievable.
Yeah, this is absolutely a true trend day, Andre. By all the rules, we drop below 2000 right away.
Yep.
This is stair stepping down. That's why this is one of the, as Steven's doing as we're talking, he's selling the rallies and he's making money because they're fake rallies, basically.
Yeah.
So yeah, this is a true trend day to the downside.
Well, we got another drop out of the 2020 race on the Dem.
Who's out now?
Warren's out.
Oh, imagine that.
So it is Biden and Bernie and Biden.
She didn't even win her home state.
Yeah, I know that must have
sad.
really killed her.
That'd be tough.
Yeah, that must have killed her. Did Trump tweet about that? He probably did.
Too funny.
Yeah. So she's gone. Well, I guess everybody's student debt won't get erased after all.
Well, you never know. Bernie's still around.
Yeah, that's true.
Although he was the big one on the student debt.
Yeah, he could pick up the mantle and run with it.
Right. He'll take a page out of her playbook.
Yeah.
All right. Da-da-da-da.
Yeah, this is definitely a true trend day. There's no doubt about it. So I'm going to hold my DAI shorts right to the close them out because, tomorrow we could be up another 900 points. Let's see. But I mean, this kind of volatility, remember though, I don't know if you remember, were you trading in 2008, 2009?
I was not.
Okay, so in 2008, 2009, we had a lot of volatility when the market was still up towards the high in early 2008. And then it kind of drifted lower for most of the summer without a lot of volatility. And then when September and October, November came, it just exploded volatility again, right? Then right after January, volatility came down, but we still declined right into March. And so it was kind of a weird time. After the volatility subsided, everybody thought, "Oh, this is good. You know, the market's probably going to go up because we have low volatility." But that's not always the case. And from January through March, we had lower volatility, but the market continued to decline every single day. Not by a lot. It almost looked like a rally in the market where, you know, you have these, you know, in the Dow you'd have like a 30, 40 point move, which is a really small move. Instead, we had the opposite. We had 30, 40 point moves to the downside every single day. And it just drifted right down into March until I guess there was all the volatility was completely sucked out of the market, even though we were declining, and it just took off after that. So, you know, if we do go into a bear trend, you know, this kind of volatility, it's just like somebody who is like manic depressive, right? They're all over the place, like every single day.
Yeah.
They can't last that long. They got to get some meds. I don't know what the med is for the market here, but it's not going to last forever, and it's going to settle into some sort of a trend. Up or down, I don't know. We'll see.
Yeah. Excuse me. You mentioned in 08, 09. The other part that really stuck out to me in those videos was it wasn't subprime that caused it. That was just the last straw.
Right.
That was really interesting.
That was really interesting. What happened was there was just no liquidity. See, what happens in a recession or in a depression is that you have very little cash. Remember, the Fed can't print money. Only the Treasury can do that. What the Fed can do is take the reserves that they have on and give credit. They're doing credit swaps.
Right.
And so, and then they go out to the primary dealers and they buy securities to hold those as collateral. And so you really don't have any more cash in the system. And that's what causes the liquidity gap when somebody wants to get out. You know, we get into a recession, we have this period in which people are not paying their bills. So corporations are defaulting on loans. So there's not as much cash, and cash is the only thing that pays the bills. You know, that's all. You know, you can't pay anything without cash. So that's where the liquidity crunch comes in. And then in the overnight market, the banks don't want to lend to each other because they don't like the collateral that's being offered by the other bank. And one of the things he said, which was really interesting, and it makes perfect sense, is that mortgage-backed securities were a large part of the overnight repo market. Mm-hmm. And then after that blew up in 2008, 2009, nobody wanted that as collateral anymore.
Yeah, so that was exactly. So it was already, like they say, the fragile system, and all of a sudden they're like, nope, we don't want those anymore because we've seen enough and it's not a good thing.
Yeah.
We pushed it too far. Let's just make more stuff up because everything works. How else can we lend money? Oh, let's lend money this way. Give it to people that don't have anything and aren't going to pay it back, but we'll still lend it to you.
Yeah, because it's all credit on their side. I mean, it's weird because we say, okay, well, the Federal Reserve is giving a credit to the primary dealers. The primary dealers are using that credit in order to loan out. I mean, it's a whole credit-based system
it's all just based on fiction. It's amazing.
It is.
Underlines of it.
Yeah, it was a little scary to watch that entire video.
Right. But then they talk about, how would you, if it's not the dollar, what is it? That's where it leads to, these potentials with XRP as being the closest thing to this world currency. And I love how it gets into the fine details, but how money is not the same thing as currency.
Right. Exactly.
And then how you can put this all together. And then it really blew my mind with, well, yeah, if XRP does become this and it's a finite amount, we know if and when that happens, more of a when than if.
Yeah.
It's not going to be under $1 because the world won't work on that.
No, there's no
really
way.
blew my mind.
Yeah, that's really, really good. There's, I just have this feeling that because it is almost as liquid as a currency from the G20 right now. I mean, it's very, very liquid. And so, but it has no number one, there's no unknowns about it because it's already pre-mined. You can't mine it, so there's no unknowns about the supply,
Right.
and there's no counterparty, and so it's an asset that can be used as collateral. So, one of the theories and one of the speculations that's running through my head is that once the legislation passes and banks can hold XRP, they can use that now in the market, the repo market, to use as collateral,
Right.
as pristine collateral that Jeff talks about.
And
It's just amazing.
Yeah, then you remove any country's advantage or disadvantage of a world reserve. You move that to this. It's more of it's already a credit-based system, right? So
Yeah.
we'll just call XRP credits, and then you have these many credits.
Exactly.
It's almost like futuristic, like you see the movies where they had the watch. Time is your credit, and
Yeah.
that's how you live.
Yeah.
You're gonna have credits, and everything's based on that because that's the value. There's no reason, or the only reason that you can't get away from it is you can't touch it.
Yeah.
So you can't have it in your pocket like a bill.
Well, how much cash is actually in circulation now anyway? So it's not.
Right. It's only for the people that don't want to be tracked.
They're only debit and credits and, in your bank account. You can't actually go feel that either.
Right. That'll be the trick to get people to change over though, right? Is moving from a currency paper-based system to a fully digital system and digitize everything. I can see it.
Yeah, so can I. Absolutely.
It's just going to be interesting to see how long it takes. And that's why
with this beer flu, they're burning cash in China because that's how
Oh yeah, I saw that yesterday. Transmitting it because of cash, right?
Well, I guess evidently because of this specific strain or mutant virus, it actually can stay on a physical item for up to 9 days. So it has longevity. And so, people are transmitting it using physical currencies. And that's why they're burning it all.
What's his name again? I never have it off the top of my head. Andre's asking about the videos. They're George Garman videos, and
it was George Gammon. Look for George Gammon, and this was Jeff Snyder.
Jeff Snyder is the guy that he interviewed.
He had 2 of them. This was part 2, I believe. It had all of this kind of information in it. Yeah,
part 2 is the bulk of it. There's a part 1 that's just him talking to him before the official recording. It's like 10 to 15 minutes.
Yeah, I can't remember Jeff's spelling of his last name. It's either S-Y-N or S-I-S-N-I.
I think it's a Y, but yeah, you'll find him that way.
Yeah, S-N-Y.
Yeah, watch those and prepare to have your mind blown.
Yeah, definitely. And when he talks about Mark Snyder, okay, thanks. When he talks about the fact that there's very little pristine collateral out there, that the banks are willing to take as collateral in the repo market, think of XRP. I just replace it.
Right.
Yeah. And watch any of the last 2 weeks videos of the digital asset investor on YouTube. Watch his videos over the last 2 weeks, man. He really connects the dots on that stuff.
Yeah, definitely.
Whew. He's been on fire.
The last part I'll add, since we're getting close to the top of the hour here and we'll have to run, is Andre, one of my rules too is I don't trade later. So even though I'm getting past my level up here, I'm not taking this long because we're at 10 o'clock my time, 11 o'clock Eastern, and it's moving over to lunchtime, and things don't operate as I like to. So I only like trading the mornings. So I'm done trading today. I got my profits early. I got them before the open. I won't trade anymore. I'll just watch it for activity and see what's going on, but I'm not actively in and out anymore.
Yep.
Kind of clocks my limit. I might close one after if I'm doing like a mini swing trade or something. I'll close it after 10, but I won't enter anything after this time. That's just that's what I do.
That's good advice. That middle of the day is just chop and really, really a bad time to trade.
I appreciate it, Mark. Thank you. You got it, Andre. No trading after 11 Eastern. Go get lunch.
Yeah.
Exactly. Don't overtrade, because then you just it's a vicious circle down.
Yeah. I mean, if you make profits, one way to give them back is over trading.
Right. Yeah. You want to be up whatever dollars and give it back half, keep trading.
Yeah, exactly.
Yep. Now we're going to teach you not to do that, right, Mark? Just follow Steve. Steven's got it right. Steven's got to start posting his trades. Just kidding, Steven. Well, you guys have a fantastic weekend. We're about to wrap here. For those that are on the wealth class, we'll see you guys in a couple hours, and I look forward to it, Dave.
Yep, me too. Thanks, guys. Appreciate it. We'll see you in a couple hours, and have a great weekend, Dan. And we'll same time next week. We good on the regular times?
I believe so. Yep, we're still good to rock.
Awesome, man.
Thanks,
all right, guys.
Have a good day.
Have a good day. Bye.